Hey, good afternoon, everybody. Eric Bird here. It is Thursday, February the 8th, and we have a little over 45 minutes left to trade today. I am using a new format here. You've never seen this from me. This is a screencast. So I think this will be a little bit easier to explain from my perspective what I see and what I do and what I use. And I think it'll be a little bit easier for you to understand and have some reference to use this for yourself and make some money with me. The first thing I want to go ahead and say is that I eventually plan on getting a tutorial guide up online that will use the same format, but right now I just want to show you an opportunity and try to get this thing up online right now. This is Ford Motor Company. I said on February the 2nd, which was last Friday, via Facebook that you should buy shares of Ford. Why do I think that we can buy shares of Ford in a market that's tanking? Well, let me explain it to you just a little bit, and I'll tell you some metrics that I watched to justify why I would pull the trigger, and why I did already pull the trigger. Let's see here. Yeah, so like I said, this is a 1-year chart that you're looking at. This is about 12.5 bucks over here, and we shot up to about 13.5, and now we're at 10.5. So it's been a bumpy road. But you know what they say, the best time to buy is when there's blood in the streets. We don't want to buy up here, we want to buy down here, right? Okay. This earnings page on Fidelity here, this is a good place to go, and this is where I do a lot of my research, and that's the main reason I like Fidelity. They have great research tools, a lot of detailed information, and you can get really deep really quick in there. But this earnings page shows a stock that is not expensive at all. The most recent report was on January the 24th. They reported 39 cents. 60 cents on a GAAP basis. GAAP is the one to really watch, but this is what everybody else watches over here. GAAP stands for Generally Accepted Accounting Principles. These estimates over here are adjusted actuals, have all kinds of tax write-offs and stock compensation adjustments and stuff, so it's a little bit wonky. Scrolling down, you'll see here that this is a nice way to kind of look at their expectations and their delivery versus those expectations. The gray bars here are what the consensus was from analysts, and the blue bars over here are what they actually ended up turning in on an adjusted basis. So again, this is what makes the stock move, and this is what they say on CNBC when they say such and such reported. But just kind of take those with a grain of salt, because that's kind of a little bit of financial engineering. Right through here, you'll see the estimates in terms of how much money they're going to make on an EPS basis, which is earnings per share. The consensus was $1.80. They turned in $1.78. This coming year, they are looking to make $1.59, according to 22 analysts. The range is big. Right now, it looks like we're on track to make, and actually, let me do the math real quick, because we've already got a full year worth of data for 2018. We got 39 cents, 56 cents, 43 cents. And 39 cents. So we made $1.77, Ford did anyways, per share in 2018, which is obviously a big beat there compared to that $1.59. So I would assume that we'll see some estimates going higher in the near future. Okay, on down we have our PE ratio. That stands for price to earnings. It is literally the price of the stock over top of the earnings per share. You see here, let's just round up. It was $1.77. Let's just say it's $2 to make the math easy. The stock is trading at $10 to make the math easy. 10 is your where'd it go there? Right up down here. 10 is your P, 2 is your E. That divides out to be 5. We are not too far away from that using actual data. We're at a 5.7. Relative to its average, that's cheap. Relative to the automobile industry, that's cheap. Relative to the consumer discretionary sector, that's cheap. And relative to the S&P, it is cheap too. It's about a 18 to 20 for the S&P right here. Okay, let's get back over to another reason that I'm liking this stock right here, right now, which is, let me get the chart up here, and I'm going to show you this on a different kind of way, just so you can kind of see it along with me. Where'd that quote go? Okay, get over here. If you look at this quote of Ford, you'll see that, okay, let me kind of explain this just real quick. Current price, bid and ask, and the number of shares being, this is multiplied by 100, by the way. The total volume for the day, what it closed at yesterday, where we opened at today, the day's range, the high, the low for this year, the average volume for the past 10 days, the average volume for the past 90 days. This is a very good indicator right here that something was coming up, and that was earnings, so that's why the 10-day is higher than the 90-day. The last trade size is not really important to me, but right here you see the PE, which has not been updated, I don't think, for the most recent data. But down here you'll see that the dividend and yield is 0.15, which means 15 cents per share per quarter, and that equates to a 5.58% yield on a yearly or an annualized basis. That's a good dividend. You can't get that in the S&P. It pays about 2%. You damn sure can't get it with U.S. bonds, and the 30-year pays like 3%. So this is a good return just for buying and owning this stock. And if it goes sideways for the next year, so what? You're going to be up 5.5%, all else being equal. That's a good reason for that. Okay, let me get past the fundamental stuff, which is like the earnings and the dividends and all that kind of good stuff. And I want to pull up over here to talk about the technical stuff, which is what I kind of focus on. This 1-year chart is a daily chart, by the way. We started at about 12.5 bucks a year ago, which was what, February of 2017. We went up to 13.5, and now we're down to 10.5. That's been a little bit of a rocky ride. Even so, and especially considering we're now at the bottom here, this is whenever it's more favorable to look at buying something. Here's why. Let me get my other chart. There it is. Nope, that's not it. Here she comes. Okay, Ford motor. Let me get it over here, and I'll put it up to a big screen for you. No, that's not a big screen. There we go. Okay, this is a candlestick chart. This is one I keep off to the side, and I usually just track the S&P with this. But this has all kinds of indicators on it, so I just wanted to show you real quick. This is the RSI, this box right through here. That's called the Relative Strength Index. Above 70 is overbought or strong, and below 30 is oversold or weak. As you can see, we're pretty low here. This is a weak and oversold market right now. The percent R, that's the Williams percent risk, is kind of how I think about it. The higher the number, the more risky it is to enter. The lower down here is less risky. And then this is our stochastics. They kind of give early signals compared to some of these other ones. You see over here it gave us a buy signal when that yellow line got above the green one right there. And sure enough, we jumped from here up to here. The next one is the ultimate oscillator, and I like this one quite a bit because it's a little bit less sensitive than the RSI and stuff, and it kind of shows you the same thing. Right now we are down here, which is pretty much oversold and kind of weak, especially below this line. So we got a lot of potential to move back higher. And finally, the moving average convergent divergent is starting to turn. You see right here, it's kind of starting to bottom out and starting to turn. And I think it eventually goes higher. That's the technical from that chart, or the technical reasons from that chart. Let me give you another thing to think about here. Let me get my notes back up here. Okay. The long-term chart of Ford. Where did it go here? Let's 10 years. And monthly. This 10-year monthly chart, this goes back now, like I say, to, what is 10 years from now? 2008. And each bar here in this situation represents 1 month of time instead of a day. You see this low that we put in back at the financial crisis to the peak up here. And this retracement line right through here, and these are the levels for that retracement. You can see we're getting close to hitting one of them. And if I zoom out to the maximum chart, you see it coincides or has a confluence with another Fibonacci retracement right here, this red line. And all these things come right around what's called round number support, which is simple. 10 bucks, 100 bucks, 500 bucks, something round and simple to think about. So I think we could dip a little bit lower, and I think 10% or $10 is about 5.5–6% from here. But even so, I think that's why you start dabbling and you buy incrementally at this point. Okay. Oh, and just real quick, if things really get going south and the whole market just kind of implodes, I do think it's very possible that we come back down here to this $8 level or even lower. I don't think we go much lower than 8, but I think 8's entirely possible. And that's one of the most used Fibonacci levels there is the 61.8%. And then we could actually touch that and move higher, and that's healthy. It's okay. And then lastly, I just want to show you for shits and giggles the option market for this thing to kind of see where everybody else thinks about it. Here we go. Today, and this is just kind of, I'm not going to get deep in here. We've got above average volatility. No, actually, we're below average. I'm sorry. Oh, but anyway, so we've got the volume today is pretty much it's a modest day in terms of total contracts traded, but we have a 1.9 to 1 call to put ratio, so that tends to be a bullish indication, versus the average call to put ratio. This is what kind of bothers me, that we may go lower, is because the open interest is a little bit lower than the average, and even though it's bullish, like I say, there's not a lot of interest out there right now, so that's why I think 10 is possible. Okay, and finally, today's trades. You see someone come in here and bought. Make that big for. Someone came in here and bought some spreads on shares of Ford, and they also just went out and bought calls. I don't really see anything longer dated in here. Here's a January 2020 where they sold it. But that's not really important to us at the moment. Okay. Let me kind of take a look back at this video, and we have to do some adjusting. But overall, like I say, I think I'm going to go ahead and reiterate yet again. Let me pull this one day up. This 1 minute chart. This shows a stock that looks like it's about to try to rally into the close. We've got accelerating buying volume down here at the bottom. And if we kind of go out to my next one, which is a 5-day, 5-minute. We see we've put in a base here, and we didn't go lower. It's starting to try to pick up with volume, and come on out. 10-day, 15-minute chart. You know, this is one of those that it looks okay to me because we didn't take out this low here, but this week's not over with. And finally, let me get the 1 month chart, and let me put it on 60 minutes. This one here, that's a little bit more troubling to me. This is one of those other reasons that we might go back down to $10. This moving average is bearish now. These are definitely bearish because these are long-term averages. Let's just go ahead and look at the 120 because that can confirm it. Yeah, so we got a solid base of support right in here at these levels. So we might actually dip back down there to those. But even so, I think you just come in here and you buy a quarter of what you want to own total, or 50% if you're only going to have a small position. And this is just like I say, this is just a good opportunity right here, right now. Buying it. Y'all have a great rest of the afternoon, and I will be putting more of these up as we go. Please comment below and let me know if I sucked or if this was helpful to you, what I could do different, and if you notice or had a count going of how many times I said or like. I'd kind of like to know what's going on with that as well. Finally, I just want to say, my wife told me last night that I was trying to make a video last night, and I was starting to get a little wore out, and I kept trying to edit it, and it was getting a little bit, it was rough. So she just told me just to try to be straightforward, genuine, sincere, which is good advice in any situation. But please, like I say, let me know what I need to do different, or what I did well, or if you just think I should just go jump in a lake, just let me know that too. All right, guys, y'all have a great rest of the afternoon. Happy trading out there. Hope y'all make lots of money, and buy you some forward, especially as we get close to 10, and be shorting this market as we go back up overall. All right, see ya.